Hi guys, welcome to a new brand series on synthetic Sundays. So here I'll be sharing a very vital information on how to trade synthetic indices, especially volatilities indices. So the approach is very simple, and this strategy I called it the 3S model, which is very simple. That is everything you need to know to trade your synthetic indices, and it is gonna blow your mind. So stay tuned, guys. So this is the trade I took literally. This trade was taken based on the model I want to share with you guys today. And if you look at the precision here, you see that okay, by just risking some dollars or $100 or $10, you can actually flip your account every weekend. So I'm only interested in synthetic indices during weekend. So, but the rest of the week, I do really trade what forex. So look at the execution here. So from risking $100 to what almost $950 in a single trade, and it takes what a couple of minutes or hours, right? This 5 minutes time frame. So look at the entry here, guys. So look at the entry here. This is precision, right? So this is where I enter exactly. My stop loss was here, because volatilities at times, my stop loss supposed to be here, because volatility at times tends to be more tricky, right? That is why I put my stop loss here. So overall, I'm just risking about $100 here. So a few minutes after that, after the end, look at it. It literally had zero drawdown. So, and you see, I keep moving my stop loss to, adjusting my stop loss to fit this what high. And look at this, literally a few minutes after that. And you're seeing this is 5 minute time frame. I move my stop loss to a break even already. And look at the target. So make sure you stay tuned to the end of this video. I'll explain each step on how you can master this whole strategy and go there and kill your synthetic indices. So guys, let's dive into the chart. Let me show you how we actually do it. Yeah, this is it. This is the model. We call it 3S model, and we only need three things here, guys. Pay attention and make sure you watch till the end. So because at the end of the video, I'm gonna show you how this strategy really works, right? So look at it. The strategy itself is very simple. It's built on only three things. So the first one is what a key candle. What is a key candle, guys? A key candle, let me use it. Go so yeah. So a key candle here is a candle that has what that's it is standing alone, something like this. If we have a candle that is standing alone, it is not inside the candle. So this is what I term as a key candle. So it is not inside what a candle. This is actually what a key candle, guys. So, and the second thing is what liquidity. So the concept of liquidity here, for the sake of this video, because I don't want it to be long, I'll be literally talking about you know, um mid-time framework liquidity, so or intraday liquidity. So that is our attention on this. And I will only reveal one liquidity concept, because I have a bunch of liquidity concepts, and the third one is time. Many people are fond of this, that synthetic indices does not operate using time, right? That's what they told you, right? And for me, it's literally no, because this thing is controlled by what algorithm. And anything that is controlled by algorithm is built on time. So any model you see is built on what time. right? So this is why I consider what time as what very important element in trading the synthetic indices. So guys, the time we'll be really using here is what New York local time. So just go down here where you see UTC, just click it. I want your time to be what New York what local time. And for every synthetic indices, so the time has set already, right? So for every synthetic indices, they have their own operating time. So for volatility, so they have the operating time, I think it varies, but it is what very predictable, right? So, and the time we're going to focus here for volatilities, I'm not talking about boom. Boom has its own times and other synthetic, pairs or asset, right? So here we are going to focus on anything from what 7 a.m. to what 10 a.m. New York local time. Guys, let me check this. Let me make sure I'm not mistaken, right? So guys, the time is actually 7 a.m. to 11 a.m. New York local time, because that is the where volatility indices, anything volatility will have their most what peak moment, right? That is where most of the movement will occur. So it is different from boom and crash or step indices. They have different what time. And I actually have what this table or conversion table. And if you need it for this time, you can comment. So or send me a DM. I'll send you the time of which you can actually trade different synthetic indices to become what more profitable. So guys, this is the three elements we need, and we have seen that okay, we have what a key candle, we have added identify it, but let's go into there and study how this will actually work. So guys, look at it here. We have a key candle. So this is what a previous what, let's say this is what a daily candle, previous candle, right? So what do we need again? So doing what? Maybe on the what? We can mark the high of this candle, right? Why? This high is very important. Any high, a high or low of what is or of a key candle is very important. So I know that okay, if market should continue going lower, I don't want to see another candle that close above this high. So that is what invalidation for this setup. So what do we need again, guys? So as another day is what open, so this is what day one. So day two, this is where we want to trade what the continuation down to the what downside, right? So day two is here. And what I want to see on the what lower time frame or 30-minute time frame or 15-minute time frame, I want to see something like this. Price can go up like this. We can literally take out this and I'll target this what low. So this is what I'm always what hunting for. So I need what this what opposing liquidity to get taken. Very important, guys. So make sure you write it down, right? So very important. So we need what a liquidity to take it. Once price take out this liquidity, that is where we are dropping to what lower time frame or 1 minute time frame to look for what our enter. Remember, this is what 15-minute what time frame. So let me just say it's 15-minute time frame, 15-minute time frame. So we want to see this on 15-minute time frame. Then on the 1 minute time frame, you want to see similar things happen for us to what short. So let's go into the what example here. And here I'll be teaching you how to identify this what key candle. I told you a key candle is a candle that has that is not inside of what a candle. And here is kind of very complex, right? But for today, what I literally use for today, what I literally use here, um, yeah. So what I literally use here is this, right? So I use this candle here, this bearish candle as my what? Key candle. So I just mark the high of that candle. So yeah, because this candle, if you look at it, it is actually inside of this candle. So I consider this as my key candle. So the next thing is the invalidation to this is if market open and trade above this and close above this what? High of this what? Key candle. That is now, in that case, I'll be what? Looking forward buy. But here, in this case, since we are seeing inside of these key candles, so this is the high of the key candle, this is the low. So since we are seeing inside this range, I'm looking forward to sell. And what do I want to see? I want to see 15-minute liquidity. That is opposing liquidity taking. So let's go into this and see. So this is not based on hype, right? This is based on real algorithmic delivery, right? So look at what we have here, guys. Look at what we have here. So look at what you have here. So, so we have this liquidity here. Look at it. Buy side liquidity. I told you that I have ways of classifying my liquidity, right? So once this guy is taken, so I'm now looking forward selling. You know, this is not within the day. And for most pair or synthetic trading, we want it to be inside of this previous that is current candle we are trading into. So this will now act as a additional confluence for us, right? So our real world liquidity here is, you see this, we have this high. So once this high is taken, I'm now what? Inside of this. Look at the sell from here. So you can actually use what? 1 minute time frame to what? Catch this trade. But this is not where I took the trade. So this is where I want to explain what really happened here. Because I know if you look at it, there is what? Liquidity down here. So there is what? Liquidity down here. So this is our target, right? So look at what happened here. Look at what happened here, guys. So we take out this, we take out this high, we take out this high here, we move down. What does it mean? It means there shouldn't be what? Any liquidity here for now. So my attention was on this. I'm using this. My attention was here. So once this high is taken, I'm now what? Interested in what? Selling this. So, and that is exactly what you see on the screenshot I posted. So go and check, you can go back and check the what screenshot I shared. So this is exactly where I entered using the 1 minute what time frame, because I know the next target is here. So look at it, guys. So on the 1 minute time frame, I want to make it very, yeah. So this is 1 minute time frame. So once I take out this high, what I'm literally waiting for is, I told you I have a lot of you know a lot of things to consider before entering what a trade, right? And most of the time I use candles narrative. So what we have here is we take out this high on the 15-minute time frame that I mark. So what happened? Price move higher. Once we move higher, we take out this, short-term high. What happened? This, there shouldn't be what, since we take out this high here and we move down, there shouldn't be what any liquidity current here. Like currently there shouldn't be what any liquidity here. Sorry. Yeah. So once you move down, what I'm looking for is either this high, we can have a candle wick above it, this high, or we stay inside this. So what I'm literally watching is what candles. So once you have remember what I told you about what a key candle. So I'm also considering what a key candle here. So this is the logic. So once I have a key candle, so and another one candles close what below it. Let's say this is what a bullish candle, right? And a bullish candles close, open and close below it. That is what a change in state of delivery for price to continue going lower. So this is once this candles close like this. So this is exactly where I enter this position. So I'm not waiting for anything again. And my stop loss was way here. Because most of the time, synthetics, they are very tricky, right? We can literally have this. Price can literally have this, can wick inside of that and continue to go lower. So, but I know overall, you have to go lower, right? So by risking 100 to target what one to what to that almost 950, right? That is what almost 1 to 10 risk to reward. So almost 1 to 10 risk to reward, guys. So almost 1 to 10 risk to reward, right? It's 1 to 10, yeah. Almost, yeah, something like this. So this is how the trade play out, and you can go back and see how I literally enter here. And let me show you again. Are you seeing, guys? So are you seeing this? Look at it, check it, check the entry, guys. Check the entry, guys. Check the entry, guys. Look at it. Exactly, look at exactly where I entered. Check the entries. So this can only be I don't want to call it. Yeah. So make sure you like the video. Share and subscribe to my channel if you want more videos like this, because that will only encourage me, right? So make sure you like, subscribe, and comment the kind of video you need, guys. So this year I'm very available for you guys, because right now I want to build my community. So it's very important for me. And yeah, so this is it. So see you on the next video. Bye.